Are you self-employed or a business owner and looking to obtain a mortgage or remortgage in the next 2 years? If you are, these top 5 tips are for you. Welcome to my top 5 tips for self-employed business owners. Tip number 1 is for you to maintain up-to-date and accurate records. So do not mix up your personal and business bank accounts. If you haven't done so already, I would strongly recommend that you open a business bank account to record all of your business-related income and expenditure. Do keep up-to-date records of all your invoices and payments. If you're good with spreadsheets, a simple Excel document would be suffice. If you're not good with spreadsheets, then I would recommend that you invest in some simple software such as QuickBooks or Xero or something similar that would help you to do this. My top tip number 2 is that you do not necessarily have to wait to have 2 or even 3 years worth of income before you can apply for a mortgage. Just before I did this video, I went online and there are still some so-called money experts claiming that you must have at least 2 years worth of income before you can apply for a mortgage. That's simply not true. At the time of recording, there are at least 5 UK lenders that will consider a mortgage application providing you have at least 1 year's worth of income. My top tip number 3 is double barrel, depending on whether you are a sole trader or a limited company director. If you are a sole trader, you should not necessarily try and limit your declared income to reduce your tax liability, because the lower the income you are declaring, the lower the amount the lender is going to allow you to borrow. On the flip side of that, if you are a limited company director, you do not necessarily have to take out all of your income in the form of salary or dividends to maximise your borrowing. There are a limited number of lenders out there that will consider your net profits towards your affordability, and therefore you could keep your profits within the business and potentially borrow as much or even more than you could have done if you drew it all out as a salary and or dividends. My tip number 4 is for you to have the correct documentation required to prove your self-employed income to the lender for your mortgage application. So if you are a sole trader, the document required by the lender is something called an SA302. And that document confirms all of the income that you declared to the HMRC for the previous year. That document needs to be accompanied by something called the tax year overview, which confirms that you paid the right amount of tax on your earnings for that previous tax year. If you are a limited company director, you will also need the SA302 and the tax year overview documents, but the lender is also likely to require a copy of your financial accounts for the limited company. So it is worth getting in touch with your accountant to ensure those financial accounts are available as soon as possible after the financial year end. And finally, my tip number 5 for self-employed business owners is to not simply apply to your current bank for your mortgage. And that's because your income is far more complex than that of an ordinary employed applicant. So if you want to maximise the amount you can borrow based on your self-employed income and obtain the most suitable mortgage based on your circumstances, then you should speak to somebody that specialises in self-employed mortgages, such as a mortgage broker that can consider options based on lenders from the whole of the market. So that concludes my top 5 tips for self-employed business owners. I hope you found this useful. If you have any questions or queries, or you want to find out more about your self-employed mortgage options, feel free to reach out to me. I would love to hear from you.